All right, so good evening and welcome to our class on single entry and incomplete records. So we are looking at single entry and incomplete records. So we will pick it one by one. So first of all, let's look at single entry. We learned from the onset of the basic accounting that to every debit entry, there is a corresponding credit entry. And to every credit entry, there's a corresponding debit entry. But when only one side of the entry is made, then we say there is a single entry. So single entry talks about, so when we talk about single entry, we say that this is where records kept by an entity are not in accordance with the double entry principles, are not in accordance with the double entry principle. Meaning that only one entry was made. Instead of the double principle, only one entry was made. And this happens most of the time in small businesses, okay? Small businesses. Mainly witnessed in small businesses. Because they don't have qualified people and it causes them to make so many mistakes. But in as much as they have small people, in as much as they don't have many, qualified people in their firm to do the normal double entry, they still determine profit and loss. So how do you determine profit and loss? For example, my mother is very old and she didn't do schooling. But she's a trader. In as much as she didn't do schooling, she was still able to calculate her profit on daily basis. How was she doing that? The thing is that they know that profit increases capital. So that is the trick. They know that profit is an increase in capital. Now, take for example, if you started a business or whatever it is that you started a business, let's say you started with 10,000 at start. Then you did not put in any additional capital, neither did you do any drawings of capital. But at the end of the year, you realize that the money that you started has gone to 20,000. So this is it at end. Then for our mothers, they know that profit is an increase in capital. So they can say that this thing that we see here, the difference of 10,000, is actually a profit because they didn't bring in any additional capital. Neither did they withdraw any money from the business, but they've realized that their cash has increased. Their capital that they used to start the business has developed in terms of cash and it has increased. And by that, they know that, then they've made profit. In the advanced level, we call this thing capital and capital maintenance. Yeah. So you realize that after deducting all of his expenses and everything, when he started the business with 10,000 Ghana cedi, he's still having 20,000 Ghana cedi. So if he takes his original 10,000 out of the 20,000, then it means that what has caused the first 10,000 to increase is now what? A profit. So profit is actually an increase in capital. So therefore, it is easy. And this whole thing that we are talking about, it still comes in from the accounting equation that we've been learning. It comes from the accounting equations that we've been learning. And we are going to use the accounting equation to go deeper. So you see that in terms of having money at the start, so money that you had at the start of a business, we also call it the capital. And when that money increases, you realize that the capital is increasing. So that is what basically happens. So remember, we said that the accounting equation, that is in the very, very first video that we started this whole process of accounting with. We have the main accounting equation, which tells us that asset is equal to capital plus liability. So that is the main equation. The main equation tells us that asset is equal to what? Capital plus liabilities. And we also learned that we can do change of subject. So subsequently, we could say that the equity, therefore, is equal to what? Assets minus what? Liabilities. And this is what we are going to use all the time. Because if I want my equity, then it means that there has something, my assets have exceeded my equity. So these are things that you should take note of. So therefore, for example, let's say this year, this year is, let's say, 2024, all right? Let's say this year, if I take my capital of this year, so capital this year, 2024, and I minus my capital for last year, 2023, on the assumption that, there was no extra capital introduced. So I didn't put in any other capital, no addition. On the basis that I didn't also withdraw from my capital, so no drawings on my capital. What I now realize is that the difference of my this year capital and last year capital, like we did here, all right, becomes what? Profit. So that is it. So will be equal to what? Will be equal to profit. If that is the case, then we are saying that by change of subject, all we are trying to put here is that if I have so if we say, you look at the way the things are positioned. So this one means that if I want to have my current year capital, I can shift this side to here. All right, I can shift it, which tells me that my last year's capital, all right, plus, so you could see, let's say profit is there and capital is coming to add the last year's capital. So plus profit should be equal to my what? Current year. So we can call this last year or opening capital, right? And we can call this one as current or closing capital. So basically, that is how the equation works. So you could see here from this analogy that we did, if I drag this analogy down here, then it means that my last year capital, which is my opening capital for this year, will be 10,000. Plus, if I don't know my profit, I'll put X. But we realize that our closing capital was 20,000. That tells you that X is equal to what? 10,000. So if you do the change of subject. You have 20,000 minus 10,000. Then here you have 10,000. So that is how you can find profit. So you can use the accounting equation in terms of the equity to be able to find your profit. Okay, so let me give you an exercise. Let's say last year, let's say last year will be, let's say 2023. And let's say in last year, my capital is 20,000 Ghana cedis. And I'm giving you, we are in 2024. So in 2024, which is current year, I have capital of, let's say 30,000. Can you find the profit? Can you find profit? Yeah. So we said that the opening capital, and don't forget, closing of last year is the beginning of 2024. All right. So opening capital plus profits is equal to closing capital. And if that is the case, I have 20,000 plus, I don't know the profit, but I know the closing here is 30. So X therefore is equal to what? 10,000 Ghana cedis. So profit therefore is what? 10,000 Ghana cedis. So that is how you can find profit, because profit is an increase in capital. Now, what if they did some drawings from capital? Drawings. So when there is drawings, on capital. So what if the person decide to withdraw some things from his capital? If that is the case, then we all know that drawings reduces our capital. Is that not it? So basically what that is going to tell us is that then it means the formula will now be opening capital plus profit, which is an increase in to capital, minus drawings is equal to what? Closing capital. So that is how the equation now will be. So let's take this same scenario, and now let's assume that the person did drawings of, so let's say the person did drawings. So this same scenario, all right, let's say the person did drawings of 7,000 Ghana cedis. If we did drawings for 7,000 Ghana cedis, how do we find our profit? We know that it will be opening capital, which is 20,000, plus profit, we don't know, minus drawings of what? 7,000, equal to my closing capital of 30,000. All right, that makes this side 13,000 plus X is equal to 30,000. X, therefore, is equal to how much? Yes, can you guess? Can you guess? Because if I do this and take this one out, I have 13,000. And if I move the 13,000 that I have here, if I move to the other side, it will be 30,000 minus 13,000. And what answer? Where's my calculator? Yes, the answer is clear. It is what? 17,000. So profit is 17,000. So if there is drawings, you all know we always less drawings. So you fix it into the equation, then that is it. Okay, what if the person also introduced in additional capital? If when there is what? Additional capital introduced. All right, additional capital. It's an additional capital, so it's supposed to increase our capital. All right. So what is going to happen is that the equation now is going to be my opening capital plus the additional capital introduced. Okay. Plus profits minus drawings is equal to what? Closing capital. So that is the basic equation. So let's say this guy decided to introduce in additional capital of 3,000. All right, during the year. So addition of 3,000 cedis to capital. What will we do? So already we know that the opening capital was 20,000. Plus, now we know that there's an additional capital of 3,000. Then plus profit, we don't know, minus the drawings, which was 7,000, is equal to what? Closing capital, which is what? 30,000. So this one will be 13. We had 13 before, so plus that gives you 16, because this is 23 minus 7. So that is 16,000 plus X is equal to 30,000. X, therefore, you come and put this one here. And that one will give us something like 14,000, right? So we have 30 minus 16. That profit is what? 14,000. So that is how you can find profit using these scenarios. So therefore, I can draw a nice, statement for you to see how you can fix that into that statement, like a format, all right, for this thing. So you can do that and you'll be able to get your profit, your percent profit, because it was a single entry that was made, all right. So let's do that. So what I'm going to do is that kind of give you a format you can use, all right, format you can use. Okay, so what you are going to do is that you are going to prepare a statement of P&L, all right, so that you can use to, what happens is that when you do P&L, we do P&L to get net profits. I think by now we all know that. But what if the people did not do a proper record for us to use the P&L to get our net profit? This is another way we get net profit. So this is what we've gone through. All right. So these processes, and that is how we find profit when the accounts are what? Not complete. All right. Or there were single entries that were made. All right. So in finding net profits of a single entry, how do we do it? So that is the format I want to give. It is this same mathematical thing I'm going to put in a format. All right. So we will be doing a statement of profits and loss. All right, for the year ended. So you put in the date. So you have to put in the name of the company. It's very important. The name of the company, whose account, who are done the single entry, whose account you are trying to correct. All right. So how do we do it? This is how I'm going to do it. I'm going, instead of starting from opening stock to opening capital plus profit minus drawings plus addition. I'm going to start with the closing, all right? So this is how it's going to look at like, okay. So we do it like this. So we start with our closing capital. All right, so once we have our closing capital, which is the capital for the current year, don't forget, is the one for the current year. All right, so we put it there. All right, then you saw this. Once we wanted to find X, you saw that we had to, this is our closing. You saw it, this is our closing. You saw that we had to push this one to this side and make it a plus. That is 37. Put these two, all right, so this one made it like 37,000. Put these two, all right, to the other side. That will make it like 20 minus 23,000. And that is what we have giving us 14,000. So what I've done is to start with this 30,000, which is my closing. So you could see that what I'm going to do is to take the opening to the other side. Since I'm taking the opening to the other side, it will be what? Yes, your guess is as good as mine. It will be less what? Opening capital, which is the one coming from last year. So last year's closing is this year's opening. So we less that. All right, we less that. Now, when I finish lessing that, you saw this one, the further 3,000 that came. That one is positive. Since I started with the closing, I need to send this one to this side. And that one, what am I doing? I need to less further what? Additional capital. Less further additional capital introduced. All right. So let's say here is easy. Then I'll take out this. All right. Then I'll get this. Then what is left? What is left is that it is the drawings. You see, when the drawings is rather coming to this side, what is it going to be? Addition or subtraction? Yes. Your guess is as good as mine. We are doing addition of what? Drawings, because we started with the closing stock. So when you add this one, then it means we found our net profit. So basically, that's that. All right. So that's that. Net. As simple as that. Now, why don't we practice with a question so that we will know that we are good with this? Then we can continue in a second video whereby we are setting these, even these closing capital and opening capital. How do we find it? So let's practice with this one. There's a question. So we have a question to deal with. Right? Okay. So this is the question that we'll be looking at. Question one for single entries. All right. So with the same format that we learned, that is what we are going to do. Don't forget, everything we are doing is out of the accounting equation because you found out that we need opening capital and closing capital, and we can get what? The net profit. So how do we then find capital? That is where you need to remember. So that in finding capital, we need to do the accounting equation. The accounting equation tells us that capital is equal to what? Asset minus what? Liabilities. So now if we take this Vicky question, our class rep for Accra City, Vicky has not kept proper books. I think this Vicky keeps proper books. But for this example, this type of Vicky doesn't keep proper books. But she has kept notes in her diary, which I know she does that from the transactions of her business. And she is able to give you the details of her assets and liabilities as at 2015 and as at what? 2016. Now, we want to know the profit. What we are trying to find out is the profit, okay? So profit that has happened. And we know that to find profit, we did the mathematical analysis, or we also presented it in the table. You will need closing capital, we will less what? Additions. We will also less what do we call it? We will less additions, all right? Then we will add drawings. And we also less the opening capital. So first of all, we start with the closing capital, less the opening capital, less the further additional capital. Then we add what? Drawings to find out our profit. So that is what we said. But with this one, our opening capital These are the information we have, and our closing capital too. These are the information we have. So the same thing, asset is equal to capital plus liability. If asset is equal to capital plus, if capital is equal to asset minus liability, that is the change of subject aspect of the equation. Then what are the opening capital? How do I find my opening capital? To do this, then it means that I need all my assets. And in this question, what are my assets? I have a van, so you do the assets. I have a van, that is how much? A van is 6,000. I have fixtures. So what we are doing is just this. Fixtures of 1,008. I have stock, which is 3,000. Debtors. So know your assets from the very first accounting lecture video. All right. I listed some of the assets there. Debtors, we have 4,100. Then we have bank, that is 4,800. Then we have cash, 200. So these are all my assets. So if I do this, calculator is here. So I have 6,000 plus 1,008 plus 3,000 plus 4,100 plus 4,800 plus 200. So that gives me 19,900. Then I less my liabilities. What are my liabilities for 2015? Because this one is 2015, that is last year. All right, so my liabilities, I have creditors. Then I also have loan from Yasmin, my accountant. All right, and auditor. So now we have 1,200 plus 3,500. So together, what does that give me? That is like 4,700. If I take the 4,700 from this, that gives me 15,200. So this is my opening word capital. All right. That is that, my opening capital. So that is that. Then let me look for my closing capital. So that one too, I have all the information. Closing capital, that is the one for the current year, 2016, right? So that one too, I have assets. The assets are, I have a van, that is, and the van after depreciation, all right? It's a van after depreciation. So fixtures also after depreciation, everything after depreciation. So that is the net book values that we are picking, okay? So this one is what? 5,000 fixtures. It's also what? After depreciation. Don't forget that, because assets, the figures that we use in the balance sheet are always the net book value, everything after depreciation. Then we have stock. So even the stock too, there can be stock loss, drawings. You have to adjust those ones too. All right. So 3,800. Debtors, 6,200. Then bank is 7,500. Then cash is 300. If I total everything, I have 5K plus 1,600 plus 3,800 plus 6,200 plus 7,500 plus 300. Now that gives me 24,400. So if I now less my creditors, what do I have? So the liabilities are the creditors, which is 1,008, and another loan from Yasmin, which is 2,000, making it 3,800. So if I deduct minus 3,800, that gives me 2,600. So now What is our profit? We prepare our statement of profit. So we want the profit and loss for the year ended. So this will be 31st December 2016, right? Yeah, 16. Let me write it to 2016. All right, so we are looking at Vicky. So you put your CD signs nicely, all right? Now, we said what do we start with? Closing capital, right? So what is my closing capital? My closing capital is 2,600, right? Then what do? We less opening capital. How much is my opening capital? Opening capital was 15,200. So I less that 15,200. That should be giving me my profit. Yet, because there are drawings, you remember what we used to add drawings? Yeah, we add drawings. So this one that we are less than 2,600 minus 15,200 gives me 5,400. Then what do we add? There's no any other further addition to capital. So you now add what? Drawings. And the drawings is what? 5,200 in this year. That is what you see here. So that makes it 10,600. That is my net profit. All right. So basically, that is that. So this is how you go around doing a single entry. You use the accounting equation. Profit is an addition to capital. Drawings is a deduction. So you can start with opening capital, add profit, less drawings, add additional, what do we call it? Further capital, and you should get your closing capital. If you like, let's try the mathematical aspect of this. So we said that in the mathematics, we need opening capital, right? Plus further capital, which we don't have here. So plus profit minus drawings should be equal to what? Our closing capital. All right. So per days, what was our opening capital? It was 15,200. All right. We don't know the profit. X minus the drawings, which was 5,200, right? Should be equal to 20,600. All right. That is our close. So how do we find X? If we deal with this side alone, you realize that this side is just like 10,000, all right, plus X is equal to 20,600. X, therefore, is equal to 20,600 minus 10,000. And therefore, X being our profit is equal to what? 10. So this is 2,600. So it will be 10,600, just as we've had here. So how are you going to approach it? Mathematically or the statement-wise? Whichever one is fine. So thank you. We'll meet again. And the next time we meet, we are going to learn how to prepare statement of affairs. All right. And also solve a question on that. And lastly, in another video, we look at incomplete account or records with missing figures. This is something you can start with from the beginning and grab the understanding. Anyway, my name is Thomas Ansa, and I actually encourage that you subscribe to the YouTube channel for all forms of accounting video, right from the beginning to the very chartered accountancy level. Thank you. God bless you.